Hey everyone, welcome back for another deep dive. Today we're going to be tackling a Motley Fool article from March 7, 2025 that really caught my eye.
Oh, yeah.
The Nasdaq is officially in correction territory.
Oh, wow.
Which has a lot of investors, kind of spooked. But this article argues that the AI sector might actually be a good place to look for opportunities right now.
That's an interesting take because, usually a correction sends investors running for cover.
Right.
But the Motley Fool is really making a case for seeing the long game.
Yeah.
Particularly when it comes to tech and AI, which has been so hot lately.
Exactly. So instead of panicking, let's see if there are any diamonds in the rough.
Yeah.
The article highlights two specific AI-related companies they think are worth a closer look.
Okay.
And the first one might surprise you. It's Meta.
Oh, really?
Yes, the Facebook and Instagram folks.
It's not the first company that springs to mind when you think AI.
Right.
But Meta has actually been investing heavily in this area for the past few years.
Yeah, well, what's intriguing is that they're already sitting on this mountain of data.
Yeah.
Thanks to their billions of users.
Yeah.
Which could give them a real advantage
when
it comes to training AI algorithms.
Okay, so let's break this down. We all know Meta. They're the social media behemoth.
Right.
Over 3.3 billion daily users across their platforms.
That's a lot of people.
That's a lot of eyeballs, and it translates to a massive ad revenue stream. We're talking $160 billion last year.
Wow.
But they're clearly not content to just rest on their laurels.
Right.
They've made AI a top priority and are planning to invest a whopping $65 billion this year alone.
Huge.
Part of which will go towards building a massive new data center.
Oh, wow.
This is where things get interesting.
Yeah.
They're not just throwing money at the problem.
Yeah.
They've been developing their own AI language model called Llama.
Okay.
And the potential applications here are pretty vast. Imagine AI-powered assistants integrated into Facebook and Instagram.
Yeah.
Personalized content recommendations, even more targeted advertising. So basically, they're using their massive social media empire as a giant testing ground for their AI ambitions.
Oh, that's interesting.
It's kind of brilliant when you think about it.
Yeah.
They have access to an insane amount of data on user behavior and preferences.
Right.
Which is pure gold when it comes to developing and refining AI algorithms.
And if we compare this to, say, Google,
yeah,
which has a similar amount of data from search and other services,
right,
you can see how Meta might be uniquely positioned to leverage its platform for AI advancements.
Now, of course, the Nasdaq correction has hit Meta's stock price, like pretty much everything else in the tech sector.
Right.
It's down 11% in the past month.
Okay.
And is now valued at 24 times forward earnings, down from 28 times just a few weeks ago. So is this dip a chance to get in on the ground floor of something big?
That's the million-dollar question, isn't it?
Yeah.
It's important to note that Meta's main revenue stream still relies heavily on advertising, which can be vulnerable to economic downturns, so there's definitely some risk involved.
Sure.
However, if their AI investments pay off,
and
they manage to integrate these technologies effectively into their platforms, this could be a significant turning point for the company.
It's almost like they're trying to reinvent themselves before our very eyes.
Yeah.
I'm curious to see how this plays out.
Me too. This is a company that's known for disrupting industries.
Yeah.
So it wouldn't be wise to underestimate them.
All right, so we've covered Meta, the social media giant, making a serious play in the AI arena. But now let's move on to the second company the Motley Fool highlights.
Okay.
And this one, I think, is going to be right up your alley. It's Broadcom.
Broadcom. Now, this is a company that's a little closer to the beating heart of the AI revolution.
Exactly. And this is where things get really interesting.
Okay.
This company is practically invisible to the average person. But their reach is mind-blowing. You ready for this?
Yeah.
Their technology handles over 99% of all internet traffic. Wow.
That's right. Practically everything you do online is likely touched by Broadcom in some way.
That's incredible.
It's crazy, right?
It is.
They make a wide range of products and services that are essential for connectivity.
Yeah.
We're talking chips, processors, software networking solutions. They're involved in data centers, telecom networks, even the devices we use in our homes.
So how does this all connect to AI?
Well, as AI becomes more sophisticated and more companies start using it, the demands on infrastructure grow exponentially.
Yeah.
We're talking about massive amounts of data processing and high-speed networking.
Yeah.
And that's where Broadcom comes in. They provide the building blocks for this AI-powered future.
So they're not just riding the AI wave, they're supplying the surfboard.
Exactly. I like that analogy. Okay, I'm hooked. Tell me more.
What's fascinating here is that Broadcom is directly benefiting from the AI arms race happening in the cloud computing space.
Oh, interesting.
As companies like Amazon, Google, and Microsoft build out their AI capabilities,
they need specialized hardware and networking solutions, and Broadcom is a leader in this area.
I bet they're seeing some pretty impressive growth then, right?
You bet. In their most recent quarter, their AI revenue shot up by a whopping 77%.
Wow.
Exceeding $4 billion. And their infrastructure software revenue also saw incredible growth, surging by 47% to over $6 billion.
Those are some serious numbers. It sounds like they're perfectly positioned to capitalize on this AI boom.
If we connect this to the bigger picture, what we're seeing is a fundamental shift in how businesses operate.
Okay.
AI is no longer just a buzzword. It's becoming integral to everything from customer service to product development to financial analysis. And Broadcom is providing the picks and shovels for this digital gold rush.
Okay, you've definitely got my attention, but let's get specific. What are some examples of what they're actually doing in the AI space?
One key area is their development of XPUs, which are specialized chips designed to accelerate AI workloads. Think of them like souped-up graphics cards, but specifically optimized for the kinds of calculations that AI algorithms rely on.
So they're not just providing generic chips. They're creating specialized hardware that's tailor-made for the unique demands of AI. That's pretty smart.
Exactly. They're also working on a next-generation Tomahawk switch, which is going to be a game-changer for high-speed networking in data centers. As AI models become more complex and data sets grow larger, you need incredibly fast and efficient ways to move information around, and this new switch is designed to do just that.
This is reminding me of our deep dive on quantum computing a few weeks ago.
Yeah.
It seems like every major technological advancement requires a whole new level of infrastructure.
It's a great comparison. Just like quantum computers need specialized hardware and software to function, the AI revolution relies on companies like Broadcom to provide the underlying infrastructure that makes it all possible.
All right, so Broadcom is clearly a major player in the AI space. But is this a company that you as an investor would actually put your money into?
That's a great question. Broadcom has a lot going for it. They're dominant in their space, they're seeing incredible growth, and they're strategically aligned with one of the most important technological trends of our time. But, as with any investment, there are risks to consider.
What kind of risks?
Well, for one thing, their reliance on a few major cloud customers could be a vulnerability if those relationships were to sour, or if those customers decided to develop their own in-house solutions.
Right.
It could impact Broadcom's bottom line.
That makes sense. Putting all your eggs in one basket, even if it's a very big and powerful basket, always carries some inherent risk.
Absolutely. And then there's the broader question of whether their dominance in networking will translate seamlessly into the AI era. It's possible that new competitors could emerge with disruptive technologies that challenge Broadcom's position.
So even though they're the 800-pound gorilla in the room right now, they can't afford to become complacent.
Right. But to be fair to Broadcom, they seem to be aware of these challenges.
Yeah.
And are actively investing in innovation to stay ahead of the curve.
Right.
They're not just sitting back and collecting rent.
Right.
They're pushing the boundaries of what's possible in networking and AI.
Okay, so there's definitely a lot to like about Broadcom, but there are also some valid concerns. How does all of this translate to their stock performance? Because if I remember correctly, their stock also dipped recently, right?
You're right. Their stock took a hit during the Nasdaq correction, falling about 26% from late January to March 6th.
So is this a red flag, or is it a potential buying opportunity?
Well, it's interesting to note that this dip occurred before they released their most recent earnings report.
Oh, okay.
Which showed those impressive gains we talked about before the report. Their stock was trading at 28 times forward earnings, which was already down from over 37 times earlier in the year. So you could argue that the correction simply brought their valuation back down to earth.
So maybe the market overreacted a bit, and now there's an opportunity for savvy investors to get in at a more reasonable price.
It's certainly a possibility, but remember the market is a complex beast, and it's impossible to predict the future with certainty. Any investment carries risk, and it's crucial to do your own research and consider your own risk tolerance before making any decisions.
Fair enough. I always appreciate that reminder. All right, so we've covered two very different companies that are both tapping into the power of AI.
Yes.
But in very different ways. Meta is using its massive social media platform to develop AI applications, while Broadcom is providing the crucial infrastructure that underpins the entire AI revolution.
What's fascinating to me is how these two seemingly disparate companies are both beneficiaries of the same underlying trend.
Yeah.
It highlights just how pervasive AI is becoming.
For sure.
And how it's going to impact virtually every industry in the coming years.
It's like they're two sides of the same coin. You need the innovative applications and a robust infrastructure to make the whole AI ecosystem work.
Exactly. And this raises an important question for you beyond these two companies.
Yeah.
What other industries do you think are going to be most impacted by the AI revolution?
Ooh, that's a great question. To ponder healthcare, finance, transportation, the possibilities seem endless.
And within each of those industries, there will be winners and losers.
Yeah.
The companies that embrace AI and adapt quickly will thrive, while those that cling to outdated models will likely struggle.
So this is not just about picking individual stocks. It's about understanding the larger forces at play.
Right.
And identifying the companies that are best positioned to ride the wave of the future.
Precisely. And that requires thinking critically, doing your research, and being willing to challenge conventional wisdom.
Well said. And of course, a huge thanks to the Motley Fool for the insights. And if you're looking for more in-depth analysis and investment ideas, their website is a treasure trove of information.
They do a great job of breaking down complex topics and making them accessible to investors of all levels.
I always learn something new when I read their articles. And speaking of learning, I think this deep dive has given us a lot to think about.
We've seen how even a market correction can present opportunities.
Yeah.
Especially in a sector like AI, which is poised for explosive growth.
And we've explored how two very different companies, Meta and Broadcom, are leveraging their strengths to capitalize on this AI revolution.
It's a reminder that innovation can come from unexpected places.
Right.
And that there are many ways to play the AI game.
So as you continue your own investment journey, I encourage you to keep an open mind, stay curious, and never stop learning.
And remember, the best investments are often the ones that align with your own values and long-term vision.
Well said. That's all the time we have for today's deep dive. Thanks for joining us.